There's been a lot of development on Bitcoin in the past few years. That's why I'm particularly excited for this panel. Bitcoin, Renaissance, Ordinals, Layer 2s, and programmability. Our moderator is Catrina Wang, general partner at Portal Ventures, with panelists Willem Schroe, founder at Botanix, Matt Mudano, co-founder of Arch Network, Jason Fang, general partner at Sora Ventures, and Cecilia Chen, CMO of Mirror Staking Protocol. I'll hand it off.
Awesome. Hey everyone, excited to chat about Bitcoin. I remember over a year ago, actually exactly 1 year ago is when I met Willem at this exact conference. And back then, it wasn't nearly as cool to talk about Bitcoin, but a lot has changed. So actually, why don't we kick off by, I know you got the names of each, but let's do an introduction of what exactly you're building and what you're working on.
Sounds good. Awesome. Great to be here. Yeah, exactly. Like a year and a half ago, I formed a thesis for Botanix, second layer EVM on Bitcoin, and that thesis is, I think, fully playing out. Basically, you have Bitcoin, pure, decentralized, best money ever made in the world, and there were almost no applications on top of it. And now, yeah, it's $1 trillion market, and of course, you want applications on top of that. So formed a thesis that the EVM, or the Ethereum virtual machine, might be the winning virtual machine and the base infrastructure layer for a new financial system running on Bitcoin. So yeah, started a year and a half ago, went deep into the cryptography. You might also know Botanix as a spider chain. It's basically the technology that enables that Bitcoin layer 2. We've been on testnet since November and now getting ready for mainnet. So if you're interested in what we're doing, definitely check out the testnet and try it out. It's quite cool to actually see an EVM but use Bitcoin for everything. The whole thing runs on Bitcoin. So yeah, over to Matt.
Hello everyone, my name is Matt Mudano, CEO and co-founder of Arch Network. We are currently the first and only Bitcoin native application platform where we're really aiming to create more expressivity and programmability and extend the usefulness of Bitcoin itself on the main chain.
Hi, I'm Jason. I am the founder of Sora Ventures. I started investing back in 2015 at Fimbushi Capital and then started my own fund in 2017. We have 2 venture funds and 2 liquid funds, and we're probably one of the few funds in the industry that have a dedicated inscription fund. So we have a dedicated runes fund, and we have a dedicated tap fund. And we have about, I think, 29 portfolio companies on Bitcoin layer 1, 0 on Bitcoin layer 2 at this moment. So yeah, I mean, 7% of our venture fund asset goes straight into Bitcoin in general. And then on the side, we also have, I think, one of the largest Ordinals conference that we host called the Sora Summit in Taiwan. So we did that a couple months ago in Taiwan, and Casey came over to speak. Domo was there. Actually a good amount of people were here. I mean, Portal was there too. Yeah. So yeah, it was, generally we've done a lot for space. If you're a Bitcoin maxi, you're probably not a fan of me. But on the side, we also invest in things that promote Bitcoin. So for example, we just launched the first Asia version MicroStrategy. So we invested in a shell in Japan, and then we basically we invest alongside with Bitcoin Magazine and Morgan Creek Digital, and we're able basically to revamp the entire shell into a just purely buying Bitcoin. And days after just announcing it, the stock went up by 100%. And so like we are doing a lot, not just generally for Ordinals, but on Bitcoin as well.
Hi, I'm Cecilia. I'm CMO for Mirror Project. So we are a decentralized BTC staking protocol, and as lots of like BTC layers and staking protocols, the same mission for us is to bring BTC to any Omni protocol. So which means that really like bring the BTC TVL like to the different chains like Solana, Tong, like any layer 1 and layer 2s. Thank you.
Awesome, thanks for the intro. So to kick off the discussion, why don't we do a recap for sitting in the audience not familiar with the ecosystem? Bitcoin's been there forever. What's different over this past year that got us here? Actually, Jason, no, Matt, you get, yeah, exactly, you got the mic.
No, I think like a combination of between the Taproot upgrade a couple years ago and then Ordinals of last year, it really marked the first moment where you could put arbitrary data on Bitcoin for the first time ever. And that really served as a critical piece to supporting programmability as well as a variety of other applications and protocols that could ultimately be served for the Bitcoin community. And it's been incredibly encouraging to see the Ordinals community inscribing lots of JPEGs and audio files, but for what we're doing at Arch, we really took it as the opportunity to utilize it within that scope of data availability and to support actual native programmability on the Bitcoin-based chain.
Absolutely. Anything to add, Willem?
Yeah, no, I think Bitcoin has always been a very clean protocol, a very clean product, but it's not Turing complete, and it's very hard to build on. It's actually still very hard to build on. It's very adversarial environment, but like Matt said, the Taproot upgrade definitely enabled a bunch of different things, and Bitcoin has always been there as the best money, and we've seen it shift from like a digital collectible to a store of value the last cycle, and now I think we see the beginnings of a medium of exchange where you can actually start buying different tokens or JPEGs or NFTs or ordinals or runes with your Bitcoin, and so we're slowly going into that phase. And so over the last 2 years, there's a lot of research going more into like how can we actually build on Bitcoin, and so a lot of different designs have been coming out, both on the Bitcoin base layer, but also building second layers and basically building an infrastructure for a Turing complete programmability. Yeah.
Got it, yeah. And two things I will add. I will summarize as three pillars of Catalyst: is institutional Catalyst with the ETF, macro Catalyst with the halving happening, I guess, less than 2 weeks or 10 days. And we have the technological Catalyst, where just everything, the stars very much aligned for the Bitcoin ecosystem and got us here. And now I think we have more than 55 L2s built on top and 2.6 billion of market cap creation based on Ordinals. On that point, so want to jump straight to the meat now since we have very concrete panelists here. So let's start off with the L2 trends. I would love to kind of hear from you, Willem, given you're one of, I guess, the first movers in the space. There's Stacks, there's you guys, being very early on. What does it mean to have an L2 on Bitcoin, and how is it, like, why is it a big deal? It hasn't really happened before, until today. Like L2 on Ethereum, we have a bunch, and that happened a lot earlier. Why, now, and what does it mean?
Yeah, no, very good question. There's a lot of inherent drivers that we've seen. Like when you think about the transaction fees, the more the transaction fees on the base layer go up, the more market demand there is for layer 2s. Now, of course, we've had the Lightning Network for, I don't know, like 6-7 years, absolutely focused on fast free payments. Now there's also more focus on like programmability. Like we've seen Ethereum, of course, there's a huge amount of dApps being created with like DEXs, perp DEXs, NFTs, and a lot of applications have basically last bull run shown product market fit. And I've always had the theory, everything that reaches product market fit on Ethereum will reach product market fit on Bitcoin, but you need the infrastructure to do it. And so the layer 2s, or what we as Botanix are building with an EVM, is basically the infrastructure to build anything you can do on Ethereum, you can now do on Bitcoin. You can basically copy-paste every smart contract you have on Ethereum and use that same smart contract, deploy it on Botanix, and the whole thing will run on Bitcoin. So suddenly, you now have the infrastructure to actually use it for a bunch of different applications. Everything you could do on Ethereum, you can now do on Bitcoin.
Got it. And just to geek out for a second here, in terms of the architecture, it would be essentially liquidity coming from Bitcoin, execution happened on Ethereum, and then what else? What happens underneath, like data availability? Like, I guess the question is, what's Bitcoin about it, and what's EVM/Ethereum about it within Botanix?
Gotcha. So just to clarify, we're fully connected to Bitcoin. There's zero connection to Ethereum. So everything runs on Bitcoin, and what it means is you basically transfer your Bitcoin assets to Botanix, to the second layer. It is then guarded, and the security comes from a decentralized network of multisigs. But you then have the Bitcoin on the second layer EVM. What that means is you'll have the Bitcoin in your MetaMask, and you can start using it in all the applications that are on Botanix. And so the security basically comes from what we call the spider chain. That's the technology that we use for a second layer. It's actually, in our minds, an improvement of the layer 2 designs that we've seen before, like the rollups and ZK rollups and optimistic rollups are very centralized. It's a centralized sequencer, it's a centralized party running the whole thing. We as Botanix and the spider chain actually want to be decentralized. We are decentralization maxis, and so we can be more decentralized than Ethereum itself. Actually, the original vision that we envisioned was like, okay, let's see Ethereum, and let's almost identically build that on top of Bitcoin, but then with the whole thing running on Bitcoin. So the execution sits on the EVM, on Botanix. All the assets are in Bitcoin, and the security comes from the decentralization. Anyone will be able to run a full node. That is the vision that we're going for.
Bullish on decentralization, Maxi. That's the ethos of Bitcoin. Cool. So Jason, any comments there?
Yeah. I'm more of our fund is more of a, I guess, not a big fan of Bitcoin L2. So it's a very interesting debate, right? But it's not like we're not bullish on Bitcoin L2. I think at this current time, there's a lot of argument to be made whether this is legitimately like L2. And part of that is, in general, I think Bitcoin, even today, is a much more attractive place to be building on than Ethereum, because Bitcoin has its decentralized technology just like Ethereum, but it's even more decentralized. The governance system and consensus is even more decentralized than Ethereum. For example, if Vitalik gets hit by a car crash tomorrow, Ether will drop. We've seen that before in the past. But there's no central party that, like equivalent of that scenario. If Ethereum Foundation or if Vitalik decides to promote a very specific category in Ethereum or the future of Ethereum, for example, they've been big fan of something called decentralized science, which we're also big fans of. Vitalik is pro DeSci, and for that reason, a lot of people are building on Ethereum. That is a way where individual or central parties can get involved with. It's the same thing with Bitcoin Layer 2. Bitcoin Layer 2, it's interesting, but the model that is still kind of early is the consensus mechanism, right? The multi-sig. Yes, it's decentralized, but it's hard to scale. That decentralized part is really, really hard to scale. You can only have maybe right now, so right we see it's maybe 10 or 20 or maybe 7 or less than that amount of people who are actually involved in the multi-sig. But if you look at a real decentralized network, we're talking about thousands, right? Or even more, right? That is when you have security that you can scale over time. And because we don't have that, then that's the reason why the big part of that, that's the reason why Bitcoin is not really, in my opinion, quote unquote pure layer 2, because they haven't solved that issue. But it might come out in a year time. Another thing that I think is really interesting is that a lot of people see Bitcoin layer 2 as a very easy narrative to capture, right? A faster Bitcoin and a cheaper Bitcoin. Everyone understands that narrative. But Bitcoin is not Ethereum. I mean, a lot of stuff that's happening on Bitcoin layer 1 today, for example, does not follow the method of how Ethereum have kind of evolved over time. And a big part of that is all the deals on Bitcoin layer 1 today, all the alpha, VCs are not involved with it. It's almost anyone who are actually degens and then got involved with Ordinals and kind of the pups and all the stuff that's happening 100x, 1000x on a weekly basis, almost zero VCs are involved with it. And that's because the culture, the ecosystem is completely different from Ethereum, right? The opportunity cost in a bull market can be extremely, extremely high if you're investing on Ethereum or Solana versus Bitcoin. For example, people are talking about staking and they're happy with the 50% stake. But on Bitcoin, you're making 100x return on a weekly basis. We had community people who I accidentally launched a Sora token by accident, and the token was up 100x in a week. I'm not even joking. It's deployed by accident. You can go look it up. Went up 100x in 1 week, right? And it's these are things that you generally do not see in Ethereum, right? It's because the people in Bitcoin, it's all about the culture. It's about things are anim, right? The things are the people, the value. And I think these things you rarely really see, especially even in the meme coin on Solana. I think more meme coin you see in Solana are more like troll coins, right? It's more like troll coins, right? But on Bitcoin, it's actually, they have a lot of value involved. There's a lot of people who have very strong principle involved. There's a lot of simple messaging that's involved. And that's what keeps people excited about it.
Yeah, the subculture deserves another discussion panel with cross meme coin on different chains. But back to the scaling and architecture. So we covered the L2 approach is one way to scale Bitcoin and have programmability. Another one is actually smart contract on base layer, which we didn't think was possible. And I'd love to hear from Matt of how you hacked this and how what's the space evolving from your vision.
Yeah, I mean, as we all here know, traditionally, Bitcoin is not expressive, right? There's no native programmability, there's no execution environment on the base chain of Bitcoin. And much like Sora Ventures, our main conviction and thesis really revolves around the idea that native Bitcoin users do not want to bridge their assets and give up on their sovereignty principles. If they did want to do that, they probably would have gone to Ethereum or Solana a long time ago. So unlocking programmability and ultimately extending the use cases of Bitcoin on the base chain is ultimately what we set out to do. And we effectively built a VM that sits right on top of Bitcoin in order to achieve this. But with all L2s, essentially the very first step in that process is bridging your assets to a completely different chain. And with us, it's a completely bridgeless experience, both from a developer perspective and a user perspective. It's a much more frictionless experience in terms of what you have to do in order to achieve this programmability.
What are the trade-offs between building on programmable L1 versus building on L2? Or I guess in other way, what are the unique use cases that happens on an Arch versus happens on a Botanix?
I think it's there's a very explicit set of trade-offs that both of us are making, right? Like that layer 2s are purely focused on low fees, scalability, and fast transactions. We're absolutely okay with longer block times, which we are confined to. Bitcoin has 10-minute blocks. Also block size, there's 4 megabytes per block, so everyone's gonna be fighting for that block space. But we're completely okay with that because, as I mentioned before, I think that the native Bitcoin user, institutional custodians, all these different personas that are holding Bitcoin are much more principled in their requirements for what they want to do with that. And they want to achieve yield. They want to put their Bitcoin to work to earn more Bitcoin. But at the same time, I think that it's a hard ask for them to want to bridge those assets to another chain. And we've seen this play out on Ethereum already, right? Like you have probably the aggregate of all the hundreds of L2s that are out there, 10% of the total liquidity that exists on the layer 1. And our conviction is really that that's going to play out, especially on Bitcoin, where the expectation for security and sovereignty is even more so.
I wanted to ask, so it's like, because majority, to my understanding, majority of the trust right now is still, again, not fully decentralized. To some extent, it's decentralized, but it's not like fully decentralized. Is actually the same issue that we see with indexers on BRC22, right? It's hybrid. And so my question is, when would you see a shift from being slightly decentralized to more and more decentralized over time? In your opinion, do you feel that, because most of the time when you're looking at anything with security on Bitcoin right now, you basically have to trust the entire product. Like, it's not like Ethereum, there's no smart contract, right? You have to trust the entire product. And that could be quite dangerous. We've seen that also with PRC20 in the early days, right? So it's like when do you see that shift evolving?
Jason, you want to sit here?
You asking me? I'm asking you, yeah. No, I think we're starting to see it right now, right? Like one of your portfolio companies, Liquidium, right? They're basically the only successful DeFi platform on Bitcoin, and they're doing borrowing and lending against Ordinals, right? And this is a concept that's very well proven on other chains like Ethereum and Solana with Arcade DAO, NFTFi, et cetera. And at the end of the day, I think, what are they doing? Like 7 million a week in total loans, and just like their graph on Dunes just looks like this, just scaling users, scaling more loans. And this is just proof of concept of users that want to get actual native yield on Bitcoin. So it's very encouraging to see, and we're starting to see a tremendous amount of developer interest wanting to come into our network and starting to build into Bitcoin, and to ultimately create that future ecosystem of a vibrant community of dApps and protocols. So I think it's that watershed moment right now. If I could draw a comparison to the emergence of Ethereum back in 2016, 2017, and where it is today, it's a whole vibrant ecosystem of dApps and protocols, and everything that you saw over there, I think you're going to end up seeing being tried on Bitcoin, which is what you said before, I think.
Yeah, speaking of yield, I have a question for Cecilia. Can you actually define, staking, how is it different on Bitcoin? Why is it why it hasn't really happened except for maybe Babylon, that one of the first enable that, and what does Mirror do to help?
Yeah, so I guess the biggest issue is trust. So that's also what Babylon try, and also us try to tell people that, because we're talking about like the real BTC whales here, right? So so it's interesting. So create this whole ecosystem first. You like building the country, so you need M0 money first. Like instead of like that's the initial money, right? So for doing that, and all the BTC holder, what they care about is safety. So Babylon used their own technology, we use our technology, but we both decentralized. There's some slightly difference. So for us, how to protect like those BTC assets on layer 1, we are using a decentralized like node system. So let's imagine that there are like 6 people, and we divide them into like 2 groups. So if one group people, like if 2 of the 3, like in one group, that they actually corrupt and they took the asset, right? So there's actually 50% of the chance that they will corrupt. But however, if you have like tons of nodes, and also what's very important here is that we're using a different grouping technology, which is called like overlapping regroup. So basically, we will divide the nodes like overlappingly, so that they will be overlapped like in different groups. And then when they still like 2 people in 3, like they took the money, and then you can imagine that the money they took, the amount is actually less. So the more the node is, and the more decentralized it is, and also the collateralization rate will be lower. So that's how we protect the net. And you can say that, oh, if like more than 50 people, like more than 50 of the nodes are corrupt, then it's still dangerous. But that's the same thing for the BTC system as well. So that's why we need like more nodes, and also we need like trustworthy nodes. So what we do is actually our testnet is already live, and we have like a node campaign in March. We actually ask, like KOLs, projects, VCs join the campaign, because as a node, we want the first batch of node, we want them to be someone that we can trust, right? So yeah, that's pretty much what we do.
Yeah, also curious, how does the landscape of staking reconcile with the rise of so many L2s, and we also have meta protocols and programmability on base chain? It's just, we have a lot of liquidity, but also just a lot of options to deposit your BTC into it. So whether, someone from the audience, like I'd love to know how the two converge.
Yeah, I'll give you the simple answer, which is because you have to trust the entire company and the product itself. Again, it's not fully, it's a decentralized technology, but the governance is still relatively centralized. A lot of the times, it's really more of a BD play. For example, if you look at some of the top L2s like Merlin, they use Kobo Wallet. Kobo Wallet behind the scene is actually a company that is in the mining business. And so if you think about it, it's like these guys are bringing their friends and peers into this this play where it's like, hey guys, this is my wallet. You can fully trust me, and I'm a whale, a bunch of Bitcoin. We should all make this happen, right? And those guys are like, yeah, we have rats, we have sats, we have all these tokens that were billions, and we have a bunch of these BRC 420s. So let's just all put them into one basket, and then we'll call that staking, right? This is exactly why also Merlin have been looking at other solutions out there. Again, there's no best solution. There's only like solution that's like really, really close to being like safer. And some of them are mostly going with Babylon. And Babylon's a very interesting case study in Bitcoin where the team decided to come out and build this staking mechanism where it's like, hey, you stake your Bitcoin and then you earn other tokens too, right? In the Ethereum world. But you think about it, it's going to be almost impossible for Ethereum to be actually supporting or wanting to do something like this. So the closest thing they can do is like things like Cosmos, right? Atom, right? And so in the process of building something like this, they actually built something that's much more valuable, which is the security part of staking, that enabling staking. And a lot of these Bitcoin L2s, a lot of the existing kind of like products they have are all forks from other Ethereum chains. And so when they actually want to migrate into Bitcoin, there's not a lot of options out there. And so they all end up using Babylon. And so you have this like case study where it's like this company wants to do this one thing, but then the market decides to basically pivot these guys to doing the other thing. And that's like really interesting in our ecosystem because I think a lot of people did not expect how fast BRC20, so how fast Bitcoin like L2 have evolved. Of course, the valuation has gone up a lot. And so companies also have to justify that, hey, we're making these plays now as opposed to like a year, or 2 years down the road.
Yeah, I mean, speaking of staking, and I like to say this, Ethereum is Bitcoin sandbox, given you see this momentum, staking, restaking, a lot of DeFi happening. We're basically building from scratch of what already happened on other ecosystem and take the best practice and whatnot. I'm curious from Willem's perspective as a L2 CEO builder, how you're thinking about staking, restaking. Is that something you want to outsource, build in-house to attract more TVL? Like, kind of, what's the thinking there?
I think that's a very interesting question because we're actually the OG ones that brought a proof of stake to Bitcoin. If you read the Spanish white paper, we talk about a proof of stake on top of a proof of work. Like when you look at it from a technology perspective, proof of stake on a layer 1 is totally different than a proof of stake on a layer 2. And especially a layer 2 on a proof of work. Basically, all the downsides you typically see from a proof of stake on a layer 1 are solved if you build it as a layer 2 on a proof of work. That's purely from a cryptographic perspective. I think I agree there where you said like, yeah, most of the staking is just like a marketing facade. I think we haven't actually seen that play out. I do think with actual Bitcoin staking, you need a certain threshold of Bitcoin stake before it becomes secure. Basically, there's rumors North Korea, for example, has 200,000 Bitcoin. That basically means if you have less than 100,000 Bitcoin staked, North Korea can show up, stake everything, attack your protocol, and steal all the Bitcoin. So Bitcoin staking is inherently very, very risky. And so we'll see how that eventually will play out. We actually don't use the typical copies of the proof of stake. We just use the EVM as a black box and build that new proof of stake. And the reason is because the proof of stake you build on a proof of work is completely different than the proof of stake you build as a layer 1. And basically, the security you see on Ethereum. A lot of Bitcoin layer 2s try to retrofit Ethereum layer 2s and try to fit that into Bitcoin. And that's a little bit the opposite of what we are doing. We're basically building a Bitcoin native protocol and layer 2 that's capable on Bitcoin today. So we're very heavy product and technology focused. But Bitcoin staking makes a lot of sense because it is the hardest asset. It is the biggest asset. And so it is the asset that is most suited to be used in staking.
Wow, I'm learning a lot. This is great. So one more concept. So we talked about the base layer programmability, L2 scaling. There's also a meta protocol, which really, it's a way to pseudo give programmability on the base layer as an extension of Bitcoin. And I know Jason spent a lot of time there. So why don't you give us a crash course of like a meta protocol? Then I know you invest in Pipe Track and there's BRC20, where all the hype was and runes coming out. Where do you see kind of the future evolve within like this track?
So the way I look at it is that, again, I mean, this is just personal opinion. The way I look at it is that the current stake of all the Bitcoin L2s are competing with more like the EVMs like Near and IMAX and those guys. So they're more on the Ethereum side. This is why they need to raise a lot of money. But Bitcoin L1s are kind of like by themselves. The way to look at this is, is the product like fully dependent on Bitcoin, which means that if there's no Bitcoin, can these products run on themselves, like these sidechains and these quote-unquote L2s? And the answer is yes. They can actually run really well without Bitcoin. They don't need Bitcoin. But these metal protocols, they need Bitcoin. Without Bitcoin, like these guys are like zero. They're worthless, right? And so it's a lot harder for VCs in our space to capture that narrative because there's no benchmark. Bitcoin L1 is one of the newest thing in our industry because there's no benchmark, whereas L2s, there's stacks, right, which is worth billions and USD, and all the EVM plays right there is actually aligned with what's hot in the Ethereum market right now. So for VCs, it's like they understand this stuff, right? But L1s are completely different because there's no case study. This has historically been non-existent, and they're just most of the opportunity which I mentioned are for the degens, are for the retailers. They're less about the VCs because a lot of the tokens are done through fair market launch. VCs are not involved, and this is also why our fund have these liquid funds. We have these inscription funds where We treat ourselves as individual whales, and when people mint tokens, we mint alongside. And then once the token hits like a certain market cap, like 5 million market cap, we'll end up buying like 5% or 10% of all tokens. And it hits out, like 3x or 4x we exit, right? It's like easy money, right? But a lot of people do not understand that concept, and they think like, oh, you're better off investing in L2s, right? I mean, just look at the data. You can see a lot of stuff that's happening and the returns versus like Ethereum, Solana versus like Bitcoin L1. Like Bitcoin L1 is by far like the highest in all three categories. But going back to why this is also interesting is because a lot of people don't understand that. A lot of VCs are not in it, and that also means there's basically a lot of opportunities for degens. But the interesting part about this is that from a technical perspective is I do think that Bitcoin L1 will be kind of like the future of like all the Nears and all the IMX and all the Polkadot on Ethereum. There's going to be versions of that on Bitcoin L1 in the future. And the way that we're seeing that is, for example, there's something called BRC20, which was basically the fungible. It basically enabled the launch of fungible tokens on Bitcoin. But that was a very, very simple version of launching fungible token. You can only deploy, mint, and transfer. So people, and the other issue is the indexers. Like basically, the network has this thing called an indexer, and that's where you see all your asset and the quantity of asset. Like those are relatively centralized. Again, the key word is relatively because it's early. And so there's which means that developers who are looking to build on Bitcoin Layer 1, they can build a better version of it. Most of the developers that we see on Bitcoin L1s right now, they're producing extremely, extremely simple products. And they're not complex, which means that there's always opportunities for people to build slightly more complex versions of that. And that's why we're going to see a trend of all these different, like Polkadot, Near, and whatever on Ethereum today, or EVM basis, but on Bitcoin. And 5 years from now, there's going to be tons out there. And a big part of the reason why people are so kind of reluctant to invest in Bitcoin L1 today is because the maxis are totally not unlocked yet. So, if you ask yourself, right, for example, Solana, they have a fund, right, that invests in Solana projects. Avalanche, you have a fund called Blizzard that invests in Avalanche projects. What is there for Bitcoin? Bitcoin does not have a Bitcoin, like quote unquote Bitcoin foundation fund that invests in Bitcoin companies. But who are investing in Bitcoin? It's the miners and the Bitcoin maxis. And who has more money? The Bitcoin maxis, the miner versus Solana guys. Hands down, Bitcoin miners, right? And Bitcoin maxis. So that market is huge and massive. That has been maybe at this current stage is like 1%. Right? We've only been able to convert 1% of Bitcoin maxis into Ordinals. And so like for me, it's like that's crazy upside, right? And of course, this is my opinion because we're big on Bitcoin L1. But also I think I'm relatively convinced about this narrative because I've been through investing myself and our fund, and they've done really, really well. I mean, you know very well about this as well. That we have some amazing exits in the past. The last thing I want to add is I think Bitcoin L1 in general is driven by some of the most fascinated developers out there. That's really important because like I said in the past, most of the products today on Bitcoin are trust basis. You have to trust that person. You have to trust that product. You got to trust that team, right? So Casey, who started Ordinals protocol, he is one of, in my opinion, I'm not sure if anyone met Casey before in this room, but if you have, he is one of the most interesting givers out there. I'll probably say he's a bigger giver than Vitalik. I mean, Vitalik, at one point he had 1% of all Ether. Casey is one of those guys where you give him 10 billion USD, he will not take it. You give him 100 billion USD, he will not take it. And his mindset is Bitcoin, very Bitcoin-like. So I asked him, I'm like, hey, you guys have 3 people running in the entire team in Ordinals protocol. Why don't you hire more people? I'll give you money, I'll fund you, I'll expand, right? And he said, no, we don't want your money. I'm like, why? It's like, well, we don't need it. So if we actually, I'm like, okay, well, I mean, you have 3 people, like, and only 2 developers, basically. I'm like, and he said, well, if I do need money, I'm just gonna ask the community for money. But that's a very Bitcoin like thought process compared to the Ethereum and Solana world. And literally, the only thing that the way that they fundraise and the way they operate is they collect donations from the community, right? So after meeting Casey, I'm converting my fund from from generalist fund to Bitcoin fund, because when you have people like that running an ecosystem, it's insane. You're gonna get things that are like incredible. Like there's so much trust coming in, and the art industry is all about trust, and especially Bitcoin. Anyways, the point here is, if you've never met Casey before, you can look up on him on YouTube. One of the most incredible person I think I've met in the space. I've been investing in the space on an active level, like a professional level, for 9 years. Like Casey is by far one of the most, by far the most memorable guy. Like you can watch his presentation online. It's on YouTube, and you'll see what I mean. Like this guy, when you talk to him, you see the level and how far he's a visionary, right? He does not care about money. When people does not care about money, then that has 100x opportunity, 1,000x opportunity.
Yeah, and for background, Casey is who invented the ordinal theory, and he's the one creating this new token standard called runes. Matt, go ahead.
Well, I was just going to say, before we move on from meta protocols, why don't you talk about runes? Next week is a pretty pivotal moment.
Yeah, so a year ago, we decided to invest in 2 categories: the future of Ethereum, which is decentralized science, and the future of Bitcoin, which is Ordinals. And this was like in March of last year, and so way before Ordinals was a thing. And the thought process about that is that if we invest in utility on Bitcoin, the fees will go up. The fees goes up, then the miners will make more money. The miners make more money, then Bitcoin becomes more secure, because the price and the security of Bitcoin are correlated. And if Bitcoin is more secure, then everyone here that has shitcoin, you're secured, right? So that's the narrative, right? That's the narrative. So if Bitcoin drops 50%, you guys are all screwed, right? And so Casey is also a believer in this. He said, hey, I don't, again, because he's not driven by money, right? All he wants is he want to build the next 1,000x casinos on Bitcoin layer 1, right? And he does not care if we get wrecked by paying thousands of USD on fees. He wants to be all-time high, and he wants to be sustainable. I mean, fees yesterday was about, I think, 240 sats per VBIT. That's about a couple hundred USD. Yeah, which is really, really expensive, especially if you're coming from the Sonata world, assuming you can make that transaction. But the point here is it's going to be well over 1,000. And the last peak was about 600 sats per VBIT. We all think, in our world, in the Bitcoin world, we all think it's going to be well above 1,000. Some people are speculating to be well over 2,000. Which means that the fees will go up like crazy. Bitcoin is going to hit everything that is like all-time high. We're going to have all-time highs in fees. It's going to be, the network will be jammed like crazy, especially these Genesis block stars coming out on runes. Like people are trying to they're just like all crazy about it. And there's something called epic sats. Like, if you're into sat hunting, again, new category, new alpha, but different. Hopefully there's a panel next year to talk about it. But there's a thing called epic sat, and that's like after basically the halving, and there are people who are willing to spend, to my knowledge, there are people willing to spend a couple million USD just to get it. And so there's going to be a lot of debate whether this is going to be too much for Bitcoin, and that would actually even discourage the people from developing on Bitcoin. My opinion is that what Casey have done is, anyone who play poker, is we just turn a 1-2 game into a 100-200 game. Same framework, same rules, just more expensive. And so very likely that instead of making, right now with our runes fund, we're deploying maybe like 50K, 100K on these deals, and we're making 3-4x on a weekly basis sometimes. Very likely that's going to scale 10x. And that is going to unlock the second wave of liquidity on Bitcoin.
Oh, what a fascinating discussion. I know we're coming up on time, and hopefully this panel nudged you or pushed you into the Bitcoin rabbit hole. We're around if you want to have a further chat with us. But yeah, thanks for all the panelists and fascinating discussions, and thank you all for listening.
have to first confirm with the next panel. That we need their permission.